Good morning, everyone. Francisca has very well set the risk management stage for today's session, and I'm going to take it forward with a particular sector of UAE, which is DNFPP, the Trust and Company Service Providers. So before we move into a particular sector, we need to understand what is the objective of criminals or the bad actors who are doing all the money laundering and all. So the primary objective of the criminals or the bad actors is to collect illegal money, to hide the beneficial ownership, which we all know, and to disguise the source of funds, avoid suspicious from where the money is coming in, who's the beneficial owner, etc., and have access to financial institution, which is a very important part they're looking at, and converting cash to less suspicious aspects. So for that purpose, they enter a particular jurisdiction by way of legal entities or the legal arrangements. And the people who are providing that access is primarily the trust and company service providers, apart from various other services what they provide. So all these objectives of criminals, they primarily fall into all these three stages. Some comes before and after, but ultimately they are all falling under the three stages of money laundering. Now let us look at some statistics which supervisory subcommittee had provided in their national risk assessment and the sectoral risk assessment. So focusing primarily on trust and company service providers, you can see from the highlighted part that most of the TCSPs are registered under mainland and commercial free zones. So we can safely say around 97 to 98% of mainland and commercial free zones TCSPs are the major service providers. ADGM and DFSA also has, but as we know, they are more regulated free zones. So and less in number as well. Before we move into the specifics of risk and money laundering, let us take this case study. It has been taken from guide from the DNFPP TCSP guide only. And while we move with the slides and with the presentation, you can ponder on whether there is an issue in this scenario. So I'll just read it out to everybody. Person one was a chartered accountant in the business of providing corporate secretarial services to small and medium-sized enterprises in Singapore. As part of these services, he incorporated companies on behalf of his clients and acted as the resident director of companies whose directors were not ordinarily residents in Singapore. Now, person 2 and 3, members of a foreign syndicate, approached person 1 to set up 3 companies, company A, B, and C, and to apply for their corporate bank account in Singapore. Corporate bank accounts, so more than one bank accounts they're talking about. Once the bank accounts were set up, persons 2 and 3 left Singapore and never returned. Person 1 was appointed the co-director of 3 companies, although he was never a shareholder nor the authorized bank signatory of these companies. These companies received criminal proceeds into their bank accounts, derived from various frauds amounting to over Singapore dollars 650,000. The funds were transferred by person 3 to overseas bank accounts. So there are, now if you go into step by step, there are certain areas which we need to ponder and what are the compliance issues involved. The answer to this we will discuss at the end of the presentation. So while we go through this, just see what are the issues involved in this particular scenario. So let's get to some basics of who are trust and company service providers. By law, this is the definition given in Cabinet Decision number 10, Article 3. I will come back to this slide. Let's look at some vocabulary which has been specifically used. Sometimes we skim read the legal language, but let's look at some words which are very important to determine whether you fall under the TCSP or not. So the words like acting as, equipping another person, providing certain services, performing, working. So Now I go back to my previous slide. So providers of corporate services and trusts, upon performing or executing a transaction on behalf of their customers in respect of the following activities. So what activities they are performing: acting as an agent for forming the legal persons or legal structures, whether they are working as or they are equipping another person to provide the secretarial services or the directorships into the legal entity. Then are they providing any registered office, residence, permits, administrative address, post box, PO box address? We all know there are, PO box companies here, and also the registered offices on papers. So various kind of arrangements for legal persons. Or they are performing or equipping another person to perform certain trust and related activities. Again, working or equipping another person to act as a nominal shareholder in favor of another person. So the point here is we can all read the definitions, which is already provided in various guidelines and law books. But are we paying specific attention to this vocabulary of what action a particular person as TCSP is performing? Moving on, we understand that it is important for a person to test whether I fall under the TCSP testing or not, because we see this practically. People, when they are performing any of these activities, they ask, but I do this only, I don't need to register in GoML. So I believe it is very important to see as a natural person or as a registered entity, both ways, even if you do not hold a trade license, but any of these services are being performed. So the covered activities of TCSPs, they all start something like this. If they are providing advisory or consulting or an executive capacity to legal persons or legal arrangements, are they establishing or registering the legal structures or legal entities? Any involvement in shell or shelf companies, or they have knowledge of shell or shell companies? Are they managing or administering disposition or arrangement, director, company? So like this, there are various types of activities which company service providers may be providing, and it is important to self-analyze what all levels of activities I am providing to the clients or I intend to provide. A very interesting one here is number 12, business introductions, referrals to FIs. As an individual or companies. So within the UAE, we understand that there are various individuals or companies who work into collaborations with FIs in some mortgage introductions or anything like that. So please analyze whether you fall under the TCSP category or not, and then follow the related compliance. One more thing I would like to highlight here is there are trusts and company services. So we understand that a new family law, and there are many family businesses in UAE which obviously want to secure their family assets, and whether in the local jurisdiction or in the foreign jurisdiction, and for that they go for forming trusts and all. So anybody who's providing such type of services to the family businesses should also look into these covered activities and the related compliance. Fine. So now TCSP, let's say TCSP says, okay, I'm doing these services, so why should I bother? Like, fine, what is my next steps? So why TCSP needs to bother is because TCSPs are vulnerable to misuse and exploitation by the criminal and the bad actors, because that's a way of entering into a particular jurisdiction or accessing the country's financial sector and the businesses who are already on the platform. So in specific, the reasons why TCSP should bother are because they are used to establish and register the legal entities and the legal arrangements, which is a tool to circulate the money, to place them into a system. They may have access to financial services sector. They may unintentionally assist or facilitate the misuse of the corporate vehicle. The TCSP TCSP's entities can also be used by the bad actors to give a respectable impression in bank introductions to opening a bank account. The bank may not ask certain questions because the person who's referring has a respectable business and a impression in the country. So that can be misused by bad actors. That's why TCSP should bother. Then they or their staff may lack some AML awareness on the risk mitigation and what are the red flags, what indicators and possible suspicions. Also, it may be difficult to distinguish between the legal and the illegal nature of transactions unless they do a complete customer due diligence and all. So these are the primary reasons why TCSP needs to be on alert. Moving on, this is an interesting part which the Ministry of Economy had taken up in their sectoral risk assessment. So specifically related to the national risk assessment, if we see 2019 rating, it was medium to high, and then they shifted the rating to high. The monitoring has increased of TCSPs as given by the supervisory subcommittee. Now, why that has happened? So what supervisory subcommittee mentioned they analyzed in the national risk assessment was that because the TCSPs provide a platform to enter a particular jurisdictions, and also the trusts and companies of trusts law has been formed in the country. It's not yet published as mentioned by them. So they want more vigilance on this particular sector. That is why they increased the rating from medium high to high. If we read between the lines, it says the SSC adopted a conservative approach in the assessment and increased its previous medium high rating to high to ensure supervisory efforts in the sector remain a priority. So it is on a watch by the ministries. So what is the recommended actions? What sectoral risk assessment mentions? So identification and verification of source of funds and source of wealth, ongoing monitoring and screening, identification of beneficial ownership, and STR, SAR. So in the risk assessment, these few words of UBO, source of funds, source of wealth, STR, SAR, they are all over in any sector, in any place. These are the prime things for the risk assessment. Some red flag, not some, but many red flags for TCSPs. So if various accounts are being opened and used for making payments to the unknown beneficial owners, if there are large number of beneficial owners or signatories having the weight controlling interest in TCSP, and there's no clear explanations provided by the person who's opening the entities, then banking introduction they require. So if it is a respectable business and everything is black and white, then why a banking introduction is needed, because bank will do their due diligence and open their bank account. So this can be a red flag. So red flag doesn't mean you can't do a business. It's just that you need to go a little step ahead and ask whether there is an alert. Do you go ahead with the next step, or do you stop? So PEP, if the new investor is asking to open a legal entity, is the jurisdiction check is very important. If they belong to a high risk jurisdiction, then are there related party transactions? As we know, with the corporate tax coming in, related party transactions are gaining a lot of momentum. So it is important to check from the corporate tax as well as from the AML perspective. So please see the linkage between the tax and the compliance. So like that, there are then PE residency, if it is clear. So all these are also related to our taxation regime, which is building up in the country. Then are they using, so you must have noticed there are email IDs with Gmail and Yahoo and the informal domains. So please check, or maybe ask a question that do you have an official website or official email IDs. Cryptocurrency transaction, as Francesca also mentioned, that source of funds becomes very important when any cryptocurrency transactions comes in. Then shelf and shell companies. Shell companies, there's a thin difference. Shelf companies may be legal companies. Shell companies are primarily, open for some illegal objectives. But even the shelf companies, because they show their age, they can also be misused. So it's important to ask what's the actual activity going on within the organization, within that legal setup. Then consultancy payments, so which is a very generic term, which is normally used for billing. So if any such transaction payments or receipts are happening, it is important to go one step ahead and ask what this consultancy fees is for. And some are very obvious ones, like no clear explanations of transactions, under over invoicing, which is trade finance related, which we all know, it's happening. Beneficial owner identification. So there are many red flags. This is not an exhaustive list, but there are many red flags which are to be raised, questioned. Risk mitigation plan has to be in place for these. So we have seen couple of scenarios for TCSPs. So to overcome these risks, what are the obligations of TCSPs? Let's look into that. So there are applicable laws around which these obligations are devised. So every TNFPP, specifically since we are talking about TCSP today, should have an AML framework, which is also known as AML program in an organization, which involves having an AML business risk assessment and accordingly risk rating of the customers. Then they should have an AML manual, which is anti-money laundering, counter-terrorist financing and sanctions procedures manual, which describes what process and procedures they are following to comply with the compliance. Then customer due diligence form, relationship. So it starts with the relationship managers and sales, but as Francesca also mentioned in her presentation from the financial institutions point of view, that every person in the organization has a responsibility of checking. So somebody might be getting the information, somebody's checking. So what responsibility they perform, that's spread across the organization. So customer due diligence forms a very important part of the AML framework. Then customer acceptance form, which is after it has been filled, the company's MLRO or the compliance officer, they check it and then they approve it if it goes through all the ticks. If there is any suspicion, then the internal suspicious activity report should be prepared and it should be escalated to the next level of responsible person. And if it is a confirmed thing, then a formal SAR or an STR has to be filed in the GoML system. For TFS and proliferation financing compliance, the FFR and the funds freeze report and partial name match report are the obligations which has been specified to be filled in the GoML. So whatever scenario happens, the compliance is mandatory. That is what is the emphasis on. Another important thing I would like to mention here is there are lots of questionnaires and surveys which Ministry or EOCN has been sending to the DNFPPs. So it is advised to please fill those surveys and questionnaires as and when they are required by the Ministry. Keeping records, inevitably, it is important. EOCN subscription for local and UN terrorist lists, it is must as part of TFS. Employee training, this is absolutely important because until the staff or the people working in the organization, they are aware of what I'm supposed to do with regards to AML compliance. The ignorance, as we know, is not accepted in the legal setup. Moving on. So business risk assessment. As per FATF's recommendation 1, a risk-based approach has to be followed by the business. by TCSPs, where they will be assessing risks and applying a risk-based approach. So what is a risk-based approach? Let's delve into the elements of risk-based approach. Risk-based approach, the customer risk. So customer risk precisely is from where the customer is. Is customer a pet? Is customer belonging to which jurisdiction a customer is belonging to? Is customer a physical person or just a virtual? As we see that, as we are moving more and more to the virtual world, there are CAPTCHA checks which are done. So why they are doing that? They are checking whether you are actually a person or not. So in our TCSP scenario, before we open a company, we need to know everything about a customer, whether a customer has an economic purpose to what they are planning to open an entity in the UAE, whether they have knowledge and experience with regards to the business or an activity they are intending to do in the UAE. From which country the customer is coming, what type of transactions the customer is going to perform, in which geographies the customer is expecting to do business with, is the geography from the customer coming in under the high risk jurisdiction or increased monitoring or a low risk. All these are important to know. What is the corruption index? What's the transparency? Is that geography more high, like Syria or Iran or North Korea? We know that these are all high risk jurisdictions. Any of the Asian countries, if we point out, they may not be under high risk or sanctioned countries, but they may be under increased monitoring and all. So a proper due diligence needs to be done on the customer before going ahead. Is the customer a walk-in customer? With the virtual world, a lot of internet related business also comes in. So it is important to document all this and know before we get to the next stage. What is the communication? Is the customer ready to meet in person or not? Is there always a proxy, they are avoiding meeting you? So these are few things which has to be judged. They may not be black and white in real life scenario, but they have to be judged, and we can do that only if we are aware that, okay, this is something I need to check. What products and services? What's the price? Here, the transfer price will play an important role. Is the product and services what he will be billing at arm's length pricing or not? What's the potential for anonymity? So these are some things related to products and services, risk analysis, which is also vital. Transactions, are they going to be mostly cash transactions or routing of transactions through various legal entities? How the delivery requirements will be, whether they will come and pick the stuff what they're going to buy, or they're going to appoint some proxy who's going to pick the stuff, make the payment. So all these structuring or how the transaction will unfold should be analyzed with regards to the customer you're dealing with. So transactions, products, channel, geography, and customer. These elements form a very important part of a risk-based approach as per recommendation 1 of FATF. So moving on in specific, if we just summarize it, so whether the customer is opening an onshore and offshore company formation, a physical or a virtual office lease, these are few checks which should be done. If it is tick or a cross or a question mark. What's the UBO's nationality? Which jurisdiction UBO is belonging to? Who are the signatories? Whether meeting in person or authorized person? Shareholders, whether it's individual shareholding or corporate shareholdings. Are the documents of any branch office which is opened here, are they attested by Ministry of Foreign Affairs in UAE? Or cross-border transactions expected? Are they registered for VAT so that they're with regards to the local compliance? And what's the banking relationship? So these are few specific checks or the questions that should be done before actually entering into the transaction or within the relationship. a very important recommendation of ATIF 24 and 25, where they are advising every covered entity to do a transparency and beneficial ownership check of the legal person and legal arrangement. So when we say legal person, it's the entity, and legal arrangements could be the trust or the company service trusts arrangement, or any kind of network of arrangements within the legal structure what the companies may have done. Also, the unincorporated partnership, which is also one of the part in corporate tax, may require the transparency and beneficial ownership here. Be ready for the consequence. Let's see if it is, if it feels, oh yeah, it is very time consuming. I have to spend a lot of money on doing this compliance. Yes, it is time consuming. It needs resources, but it has its own severe consequences, so which we should be aware of. Yeah, so I'll just read down summarize the response of this case study. The companies had committed the offense of transferring the proceeds of crime, which was attributable to person one's neglect. There was a lack of supervision by person one over the company's affairs, which allowed the foreign syndicate to have unfettered control over the companies and to carry out their money laundering activities unimpeded. In January 2016, person one was convicted of money laundering offenses and for failing to exercise reasonable due diligence in discharging his duties as a director. He was sentenced to a total jail term of 12 months, fined Singapore $50,000, and disqualified from acting as a company director for the 5 years following his sentence. So, as from the poll, you know, some of the answers probably you can relate to the result of the case study. So moving on to almost the end of this presentation, there were 2 more case studies which I'll share with you, and you can please go through it. Finally, what do we want to convey? Key takeaways of this whole presentation today is there are certain administrative and technical responsibilities of every TCSP. Administrative, as we know, to obtain license, do your business under a trade license. Also check that the client has a trade license whom you are serving. Then register with the FIU if you are. So for this, a TCSP test is important, which I mentioned in my slide. So once that test is tick, then please register with FIU and GoML. Appoint an MLRO, which is also a compliance framework requirement by law. EOC and subscribe. Face penalties, fines in case of non-compliance. Then technically what the TCSPs are required to do is have a manual policy training, customer due diligence, KYC, beneficial owner sanction screening, STR, SAR, TFS compliance, risk-based approach, FATF recommendation 1, and be aware of red flags, because the alerts will guide you what is the next step you will have to take. Thank you so much for listening patiently, and we are open for any question and answers. Thank you.